And information and opinions expressed during the related show are those of the show personalities and guest alone, and not those of Vic Canellis Media Group, its parent, affiliates, or stations. VCMG Live is not responsible for any content, information, or opinions expressed. User bears full responsibility for their reliance on such content, information, or opinions.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes to renting versus selling and everything in between. To join the conversation, call in live. 888-994-4995, Studio A.
Hi everyone, welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that will help you make a little money, save a little money, or maybe just help you navigate this crazy world that we live in. And boy, is it crazy. Anyway, today we're going to talk about mortgages. I know we talk about mortgages all the time, but you guys always are asking, how are rates today? Are they up? Are they down? What's going on? So like always, we bring our mortgage specialist, Max Fisch, who was with Nationwide Mortgage, but now nothing's going to change. They just changed their name because they're revolutionizing the mortgage industry.
I like that. So, thanks for having me, as always.
Yes, thank you. And today he brought a counterpart with him that you're going to have to explain to me how this all went down.
Sure.
We have Jake. And
Jake.
How I could forget his name because that's my kid's name. So obviously I'm getting old.
Yeah. So Jake has come on board with us and partnered with us recently to kind of lead a team of people, and just grow in his mortgage business, right? And just grow as a leader personally, professionally. And right now he's leading a team of 6 who, are trying to grow their businesses in our area, but also nationally in different markets. And he really specializes in some niche loan programs and loan types and specific borrowers, to get them into homes.
So what we'll do is we're going to talk about some of those loan programs. And then I also wanted to talk about other kinds of programs, and I don't know if you do this as well, Jake. I know you do, which would be some of those portfolio loan programs. One thing that I'm seeing right now is that there's a lot of condos out there that don't have flood insurance.
Yep.
So.
Yeah, that's a big one. It's actually funny you said that because I just got a call on that today. It's kind of confusing because...
Was it from Tanner?
It was.
Yeah, because
That's so funny.
So
I just got a call
I'll
on
tell
that
you.
today.
So let me tell you the story.
Yeah.
So, and this is funny. So a lot of realtors, they don't even know how to manage, and I don't mean this disrespectfully, but like I was trying to tell her, I was like, hey, this building typically doesn't have flood insurance. Can you see if it has flood? Because I've got a buyer that's got a mortgage, and I'm like, I know that most of these buildings don't have flood insurance. Can you double check? I always check. If it's in a flood zone, I'm asking my sellers, can you get me your flood policy?
Yeah, so it's funny you brought that up because we were thinking the same thing, I guess. But yeah, common sense would tell you that, okay, if you want to buy a specific condo unit, then you just insure that unit, right? And you would think. But unfortunately, banks don't look at it that way. If the entire building is in a flood zone and it's not insured, then you can't just insure your unit because what if something happens to the rest of the building?
Right.
It
collapses and you're the only one that has flood insurance. What good's that going to do?
The hard part about condo financing is that you're not just worried about your individual unit. You're worried about all the other units.
Correct.
And that's why they dive into, are there any special assessments? Is there any damage in the building? Because some people would say, well, my balcony's not damaged. Those balconies are damaged. Well, it impacts the entire building and the structural integrity. So, in condos, it's kind of like each unit is arm in arm with the other one, so it's a domino effect.
But let's talk about this. Let's just say our audience, right? They're on their board. Why would you allow this to happen? Why would you want your deals to only be cash? Why?
Yeah, unfortunately.
You're bringing the values down. Like, to me, this is common sense. And you can hear it in my voice. I'm frustrated.
Sure.
Sometimes I'm really nice when I talk, and sometimes I'm like, because I'm like, this is stupidity.
Yeah.
I have another deal, right, where they're $4,000 off in their budget. Mm-hmm. And as a result,
now
right,
everybody has to put 25% down.
Correct.
Yeah.
So why not just make some changes in your budget? Because you're bringing values down by not allowing more people to be able to finance this.
Yeah, so what I see a lot of times is, the condo associations that are run by the unit owners sometimes have more of an incentive to make sure that there aren't things going on that are impacting value.
But they do make the decisions before it even gets to the management company.
Yeah, I mean, I guess it just depends on how it's structured. And it's also ignorance, right? They don't understand a lot of these things.
And I feel like
as far as
this,
reserves.
what we're doing here today, what we do on a monthly basis,
important.
you and I,
Yeah.
we're educating
100%.
other people, like, why?
Yeah.
Why are you not having flood insurance? Do you know what it costs to put flood insurance? Let's get Brandon on the phone. It's ridiculously, stupidly cheap.
Yeah, it's not expensive.
It's like $2,500 for the entire
For
building.
the whole building. Yeah,
Like,
yeah.
What are you people doing?
I know.
Co-insurance, another problem. Like, what?
Well, the thing is it's kind of silly if you think about it. Like, you're in a flood zone, so you should have flood insurance.
In the first floor units,
Right.
like those people just in general, like if something happened like what happened in Fort Lauderdale.
Yeah, I know. And that's crazy. I don't know what's going on with the sewage system over there, like the draining. I mean, every time there's like a big rain, it's like cars are floating around.
It's weird.
But yeah, so, condos is always going to be a sensitive subject, especially here in South Florida. But, we want to make sure that people are knowledgeable because hopefully if somebody's listening that is in charge of making those decisions, maybe we can.
So just to let our audience know, if you are on a board and you want Max and I to come to educate you, we're more than happy to come to one of your meetings.
That would actually be genius.
I am genius. Have you met me?
That's genius,
Hello?
Laura. We should do that. That's genius.
We're more than willing to come,
Yeah.
look over your budget, help you to tell you what you need to do to get to where you need. All we want is to throw us a bone,
Yeah.
right?
Yeah.
Do a mortgage,
We
sell a
charge
property.
$600 an hour.
Right. I mean, I'm a little off from there, but I'm not too far, right? No, we'll do it. Courtesy. Obviously, our end goal always is to use us for what we do.
Yeah.
Me as a realtor, you as a mortgage guy,
Yes,
right?
ma'am. Yep.
So, what?
How do they call you for that?
That's a great question. So you can call us you can call me at 954-650-0827 or go to my web, laurasell.com, LauraSell.com. And for you?
954-729-6933. That's the best way to reach me.
Okay. So Jake, tell us how you got involved with Max, how you guys met, like what's going on here? Because like we're so used to nationwide mortgage commercials, right?
Well, they're about to hear one.
Yeah, we're going to hear one, but that's okay. You can still get him the same way. He still does the same amazing
same
things.
thing.
He's still underwriting with a lot of the same people, probably even more at this point because I heard you do, can I call it garbage loans? Listen, let's be fair. Like, everybody wants to buy a house. Even if you have a 520 credit score, you want to buy a house, right? Do I think that you should probably try to fix your credit before doing it? I do. But for those that have no motivation and they still want to pay top dollar for a house, I heard you can help us.
Yeah, so I think there's a fine line in where you draw the line of what you're saying. Like, right, a 520 credit score, and, maybe that doesn't make the most sense. But at the same time, someone, especially younger people with, a 580 credit score, right, let's say, and the reason that they're a 580 is because they have a $200 collection and a maxed out credit card. And by the way, the limit on that thing's $500, right, because they're young.
And let's talk about that, too, when you get done.
Yeah.
Let's remind our audience what they should do when they have only 500.
Yes. So with a lot of those people, they're kind of what I consider like an underserved market. I think that a lot of people think you need to have, a 740 credit score and 20% down to buy a home. And that's really just not the case. And the lending guidelines are there for that specific reason. Mm-hmm. Now, when you have some lower, credit scores or you're putting less money down, things like that, you can get, what Max was referring to earlier is a manual underwrite. Okay. So it's a little bit different than just your, cookie cutter AUS approval, right? Which is the way I describe it to people is a green light, yellow light, or red light. right? With a red light, obviously you're not going anywhere, right? With any loan program, you hit the brakes. A green light, you're good to go, keep moving forward. With a yellow light, which is what these manual underwrites are, they say, hey, we can move forward, but under a certain set of circumstances, right? We want to make sure that after you close and you bring all your money to closing, you still have a month or two of mortgage payments in the bank, right?
Okay.
A little bit of money saved
So that
up.
could be like a retirement. Right?
Yeah,
If they
retirement
have,
funds,
Like let's say they
yes.
worked for Publix and they have all this retirement stock,
Yep.
they can utilize that
Exactly.
to show as a collateral, even though it can't be
Yeah,
cashed in right away.
Yes.
It has to be able to be cashed in a certain amount of time, right?
Yes, or show that you can take a loan for hardship, things like that. They're also going to look more at, hey, are you paying rent currently, right? So one thing a lot of people are like, I can pay this in a rent, but I can't get a mortgage, right? These manual underwrites they'll look at that and they'll say, hey, yeah, you can afford, X amount for rent. So we're going to give you credit. We're going to look at that as a positive factor. So that's kind of what they are. And, I tell people all the time that, especially realtors when they're looking at them, whether it's a green light or a yellow light, when the deal closes, the money all spends the same, so it doesn't really matter as long as
if they're already paying rent, right?
Exactly.
And they see that you have good standing, why not, right?
Yeah.
Why not?
100%.
So, but you're talking about the lower income, so lower credit. If they have, let's just say, they have lates for something. Mm-hmm. What would be some lates that they would have? Like obviously not their cell phone. They don't report that, which is interesting why they don't.
Yeah,
they don't.
there's really three types of lates, right? You have your revolving accounts, which are like your credit cards and things like that. You have installment loans, which could just be, a loan
Car
from a
payment.
bank, car payment, things like that. And then mortgage payments are also installment loans, but they're
But
kind
they
of
shouldn't have a mortgage if they have a 520.
correct. Yeah, that is correct.
So-
You'd be surprised sometimes.
Right.
And so like the order of that is, your mortgage, if you do have a mortgage, right, and whether you're trying to sell it, buy a new home, whatever, those all need to be on time, the last 12 months at a minimum. Installment loans, you also really want to be on time the last 12 to 24 months. And then your credit cards, you can have a late payment or two on a credit card and still get through, a manual underwrite. It's not the end of the world because things come up, you switch bank accounts, whatever, forgot to have auto pay on.
So that would be you'd be writing a letter of.
Yeah, a letter of
explanation.
explanation, as to what happened. And now you can't have, 4 90-day lates, but if you have a 30 here, 30 there, it's not the end of the world. Because that's also, they're not going to hit you for it twice because your credit score is reflected of that. So
Right.
they're already kind of dinging you, giving you some extra hoops to jump through for the lower credit score. Then you just got to kind of explain why you had those negative remarks.
All right, well, what I think we'll do is we'll go to commercial break. When we come back, let's talk about what is a good client for you. Like, where are you getting these clients? Who should be calling you, right? So let's do that. So we'll be right back. We're going to go to commercial break, and we'll be right back. See you guys. Check out our
At
old
JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fisch, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fisch is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fisch today at 954-729-6933 or max.fisch@nwmcorp.net.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi, everyone. Welcome to Making Money with Laura Sanders. And apparently I have technical difficulties. Anyway, we're here today with Max and Jake. So, love that name, Jake. That's why I named my kid that.
Good one.
we're here talking about mortgages. Now, Max will do a 520 credit score, but he's so busy. He's saying, Jake, take care of it.
Well, one thing that attracted me to Jake and why we have
Let's
him
be careful about our words, all right?
one thing that I liked about Jake was we're in South Florida. One thing I liked about Jake was that he doesn't. A lot of lenders will, they were so quick to say no to clients, right? And it's like if something doesn't fit within their little box, they're like, okay, can't do it, and it can be discouraging to people, right? And so one thing that Jake is really good at is, hey, like I'm going to explore every single avenue that I can, whether that's manual, FHA, conventional, VA, USDA, whatever it is. I'm going to explore every single avenue that I can to be able to get you into a home. And not everybody has that quality or knowledge or patience, right? And so
you can still call Max. He'll direct you over to Jake. But you keep mentioning something, and I think it's very good for people here in Broward and Palm Beach County and Dade County, because we're all over, but let's talk for a minute about USDA, because that is not a Palm Beach, Broward County, Dade County loan program. Can one of you guys explain to our listeners what is a USDA loan? Because it sounds like to me I'm buying steak.
Take the floor.
Yeah, it's really similar to an FHA loan. It's a government-backed loan that, instead of being backed by FHA, it's backed by USDA, and it's to promote people not just buying in the city. Right. Now, that doesn't mean that you need to go buy a 50-acre farm in the middle of nowhere, right? Like where I'm from in Ohio.
My son got into Ohio.
There is plenty of places in Florida where, a USDA loan is eligible. Now, USDA.
Like where? Give us an idea.
So a lot of like Central Florida.
Okay.
There's a lot of area there. They're also kind of up more towards like the Panhandle, but not all the way in there, like Port St. Joe area, stuff like that.
Yeah, so I know that my daughter was doing the USDA, and then I know that in the end it ended up
being
you couldn't
FHA.
do it
We went to
because
FHA,
something about, I guess, income, right? If your income gets a little too high, you get nixed out.
Yes, so USDA, because it's a no money down program, they want to make sure these loans are going to the right people. So they have an income limit based on your household size. And they will also deduct this income limit from anyone living in your house. So if you have 87-year-old grandma that's getting SSI living in in your home, even though
SSI is Social Security.
Yeah,
I know what it is. I know what it is, but you're right. You do need to be very clear with our listeners. People are learning, acronyms,
Right, or a pension or whatever. They're going to count that, even though it's not income for the loan, they're going to count that against your household income. Because again, they want to make sure it's going to the right people.
You're trying to help a woman out, and you're getting dinged for it, right?
The income
because
limits
when
are
they
relatively
die, what
high.
happens? So does their income.
Yeah,
and you still need a house.
The thought process on it is the income limits are relatively high. And when I say relatively, what I mean by that is if you're over the income limit, the thought process is that you can save up to 3 or 3.5% down for one of the other programs, and it reserves those funds for people that really can't. That's kind of the thought process behind it. But
what does the closing costs look like? It's pretty standard.
They're standard
4%.
they're standard.
People ask me all the time, what are closing costs like? I'm like, on average, about 4%.
Yeah, they're pretty much a USDA loan and an FHA loan. Pretty much everything's the same except for one, or really two big differences. Is one, the location restrictions, right, which we just talked about. You can't get them down here. But then two is, my joke is that USDA wants your blood type and your firstborn child. They will ask you for a ton more documentation. Any bank account that you have, they want to see what you have in there. Because if you got $1 million, they're not going to give you, a loan, right? So they're a little bit more.
Oh, they want to see all your bank accounts?
Yeah, they want to see.
What if you don't give it to them?
If they know that you have it, they're not going to give you the loan.
But how do they know you have it?
Well, they only know what they know. So
yeah, but if you have a transfer to one account, they're going to say, "Hey,
okay, they'll see it in there." Yeah, okay.
Right.
That's given. But they're only going to get like 2 months of the bank account.
Right, they're going to get 2 months of it. Anything that comes up where it gets a lot of people is though on their paycheck they'll deposit into 3 different accounts. Well, when the underwriter sees that pay stub, they want to see all 3 accounts that they're depositing into. So it's a little bit more document heavy, but it's just to ensure that the loans are going to the right people.
Wow. Okay. So what can you recommend to our listeners when it comes down to some of this? Because it sounds like to me almost like you just have to be breathing. Is this true or am I wrong?
No, I would say that the biggest thing is, like, if you don't think you can get a loan, still find out, right? We're going to do a soft credit inquiry. Worst case scenario, the worst thing that happens is we're going to give you an action plan so you can buy a home within 6 to 12 months.
Awesome.
There's almost no situation that you bring to us if you're working, right, and you're working full time and things like that, where we can't get you to a point where in the next 6 to 12 months you can't purchase a home if you want to.
That's awesome. And what's a good way for them to reach out to you, Jake?
They can reach out to me directly. My number is 740-644-2512.
Say it slower, because I'm telling you, I've learned you have to say it slow.
It says 740-644-2512.
That's much better.
Yeah. Or just call Max and ask for Jake. He's my assistant.
Yeah,
There you go.
just Jake. From State Farm. No, I'm just kidding. There's
Revolution. From Revolution.
Revolution.
Yeah.
We're not evolving yet, right? That's the next one, right?
That's the
Evolution.
next one, yeah.
Okay. Is there an evolution mortgage? I don't know. There might be. I don't know. So, okay, so here's where we need to, because we're going to run out of time real fast here, but let's talk about this. I want to know, what the heck is going on with the market? Like, are rates like up, down?
Yeah.
Feels like it's all around. Like, I don't know. I'm a little stressed.
I think for the last 12 to 18 months, rates have really, it's been on a roller coaster, right? Because rates are reacting to 2 sets of data every single month: jobs report and inflation report, right? And so every month, inflation is slowing, rates get better, right? Jobs, there's less jobs being created, rates get better. Why are rates getting better? Because right now, any sign that the economy is slowing is good for inflation, which is good for interest rates, right?
Right.
If inflation continues to rise, then interest rates are going to continue to rise.
But I thought, like, I mean, let's be honest with each other, right? I mean, how often can people keep going out to drink? I mean, out to dinner, out to drink, out to dinner. Well, they're drinking at dinner. But you get what I'm saying? Like, to go out to dinner now for, like, just for breakfast for 2 people, it's like $65, $70.
Yeah.
And that's like not even having not even like 2 iced teas. It's like having maybe 1 iced tea and a meal. Like, so.
Yeah, it's tough. And I don't know what is keeping the economy, running at that clip, right? And I don't know why prices are continuing to go up. I think that there was such this uncertainty, from 2020 to 2022, that it was, it was easy to borrow money, and now you have all these loans out there where people are pretty much, they borrowed money for free.
But are they paying it?
And yeah, they're paying it because it's cheap to pay, but at the end of the day, now their home that they got at $400,000 with a 2% interest rate is $700,000, and the rates are 7%.
Right, they can't move.
But there's going to be this breaking point, in my opinion, where things are just too expensive. Mm-hmm. People will halt spending money, and that's what ultimately is going to bring prices down. Because you tell me, because you obviously are the expert in this, but from my understanding, there's a lot more inventory now than there was, a year or 2 ago.
So if you give something good,
yes,
and it's got to be good,
like
right?
renovated,
really pretty, it's gonna move. So like I just actually took a listing. He'd actually hired another realtor. The other realtor didn't get back to him right away, and then he called me and he's like, "Listen, I'm really thinking what I've done here. I haven't signed. They haven't sent me back. It's been 3 days. Come on out." I went out the other night, and today we've already, like, we're painting his kitchen, we're changing his countertops, like, we're cleaning his floors, like, we're doing everything, right? And he's like, "Oh my God, I'm so glad that I hired you, because a lot of people want you to tell them, what do I need to do to make my home look better? What will get me more money?" It's not about always getting more money. It's about actually selling. Like, you want to sell, so.
Yeah, but that's there's going to be, like I said, there's going to be a breaking point, because I was talking to somebody the other day, and they were like, "Well, I guess this house is just going to sit until rates go down." And I said, "Yeah, until rates go down, or they lower their price."
Right, price will always,
right,
I know,
right.
And that's another thing, fighting with people about price. So
it's like, what is this house going to be listed for a year and a half, waiting for rates to go down? It's like, at some point, they're going to have to lower price to make it more marketable, and that's what I think ultimately corrects and rights the ship.
Which is kind of scary. So, well, one more time, what's a good way to get you, Jake?
You can call me directly at 740-644-2512.
And Max?
954. I practice with this going slow.
I heard. I'm just kidding.
954-729. 6933.
And if you're looking for an amazing realtor who has a lot of experience and will get the job done and is responsive, give Laura Sanders, RE/MAX Direct, a call at 954-650-0827. Again, 954-650-0827. And until next week, we'll see you then.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you